Welcome back to Dinar for Veterans. Today we're cutting through a claim that's moving fast across the community. A 471 exchange rate for the Iraqi Dinar supposedly flashed on television. It's a headline that lights up group chats and triggers old hopes. But our job here is mission discipline. We verify, we understand the system, and we make decisions based on facts, not flashes. If a rate is real, it won't whisper from a single screen. It will move through the chain of command of the global financial system, visible, coordinated, and impossible to miss. Let's establish how television numbers actually get on air. Broadcasters do not invent exchange rates, and producers aren't typing them in by hand. Networks pull live data from institutional feeds like Bloomberg, Refinitiv, and ICE that mirror what central banks, major banks, and market venues are publishing. If those feeds change, everyone sees it at once. TV tickers, bank terminals, trading platforms, retail converters, and settlement systems. That's why a genuine new rate wouldn't surface as an orphaned number with no supporting signals. If it's on TV and it's legitimate, it's because it's already in the plumbing of the financial system. So how do odd numbers end up on a screen? Glitches happen. More often, labels mislead. Some tickers display IQD per USD, while others show USD per IQD. And if that label is off-screen, a viewer can mistake one for the other by a factor of hundreds or thousands. Sometimes a figure isn't a spot exchange rate at all. It could be a yield, an index value, a cross rate for a different denomination, or a historical data test feed that shouldn't have gone live. Networks correct these errors quickly because they have to. Their credibility depends on data integrity, and their vendors stand behind that data with service-level guarantees. If a 4.7001 IQD rate were actually authorized, it wouldn't vanish. It would cascade everywhere. That leads to the second piece of this story, the backscreen theory. Private bank rates supposedly visible to insiders, but hidden from public feeds. Here's how real infrastructure works. Banks maintain synchronized rate tables across core banking systems, treasury desks, payment rails, and correspondent accounts. Those systems settle dollar-dinar movements through routes that touch central bank rules and global compliance filters. There isn't a secret, parallel set of rates that lets a bank transact at $4.71 in private, while the world remains at roughly 1,300 dinars per dollar in public. If a bank executed at a dramatically different rate than the official one, reconciliation would fail, compliance alarms would trip, and counterparty risk officers would shut it down. The Central Bank of Iraq runs the show on policy. Any change they authorize updates the official rate tables that flow into those very feeds you see on TV. The system is designed for consistency because markets can't function on split realities. That's why a veteran mindset serves you well here. In any operation, truth is confirmed by multiple, independent sources, not by a single unverified sighting. We don't anchor strategies on rumors. We look for synchronized signals across the command structure. In currencies, that means the central bank's website and circulars, IMF and World Bank documentation, bank dealer pages, FX broker platforms, and the major data vendors, all printing the same numbers at nearly the same time. Anything short of that is noise. Perspective from inside Iraq underscores the same point. This week, commentator Frank26 relayed a local exchange in which Omar cautioned it wouldn't happen in July, emphasizing that it's a process, and stability is still the focus after years of entrenched corruption. Frank26 countered that corruption is being eradicated now. Whether you agree with either angle, the useful takeaway is the frame. Processes are moving, expectations need calibration, and what matters are verified steps with visible outcomes. Policies implemented, systems tightened, and cash flows documented. A mysterious TV number doesn't override the operating reality inside the Iraqi economy. To understand what a legitimate change looks like, consider a real-world example Sandy Ingram highlighted: Zimbabwe's reform run and the emergence of the ZIG. A year ago, commentary centered on collapse. Today, multiple independent sources can show how reforms tightened monetary conditions, stabilized pricing, and produced a stronger showing against the dollar, with quotes around a few US cents per zig. You didn't have to chase rumors to see it. Banks, official notices, and mainstream coverage all reflected the change at the same time. That's how monetary credibility is built, in public, with receipts, and with policy actions that hold under scrutiny. The same principle is playing out in Iraq's economy. Claire pointed to Basra receiving its second oil tanker in 24 hours through the Strait of Hormuz, with more on the way. That's tangible throughput. Oil moving through named ports along known corridors on documented schedules translates into export revenue, budget support, and the foreign reserve picture that ultimately underwrites any future exchange rate posture. Tankers aren't rumors. They're measurable flows that affect balance sheets and policy options. If you're tracking what truly matters for currency strength, you start with revenue reliability, fiscal discipline, and an improving trade position, facts that traders, rating agencies, and central banks all monitor. There's also a strategic communications dimension to all of this. Reset Intelligence framed it well. A currency earns trust by demonstration, and demonstrations need witnesses. Reforms that matter are engineered to be seen. You should expect public anti-smuggling actions, transparent auctions, and cash window statistics, daily reserve snapshots, and prosecutions where needed. That visibility isn't for show. It's how a government and a central bank prove to markets that the rules are changing and enforcement is real. If Baghdad were preparing markets for a major rate shift, they wouldn't hide it. They would stage evidence in sequence to build acceptance and reduce volatility risk, precisely because the audience, domestic and international, has to buy in. Now let's be explicit about what would occur if a 4.71 cent rate were actually enacted. The Central Bank of Iraq would publish a formal decision and policy circular. Banks would receive implementation guidance with settlement dates and conversion tables. The CBI website would update its official rate. The Iraqi Stock Exchange would acknowledge the change, and the Ministry of Finance would address budgetary implications. Correspondent banks would push synchronized updates across their systems. Data vendors would propagate the new rate to TV networks, trading terminals, and retail feeds. FX brokers would recalibrate pairs. Payment processors and ATM networks would adjust. Every touch point would reflect the new reality within hours, not days, and certainly not in just one place. You would also see a flood of global coverage, because a move of that magnitude is a once-in-a-generation story. There's no soft open for something this consequential. This is why it helps to work from a practical checklist, instead of chasing isolated claims. Miliciano offered one this week that mirrors how real change tends to roll out. Seat the cabinet, pass the hydrocarbon law, execute the Washington trip with deliverables, and then anchor policy to a real effective exchange rate that aligns with trade. Whether that exact order holds, the logic is solid. Cabinets, laws, and agreements are public, time-stamped, and verifiable. They build the scaffolding that can support any future rate regime. When you see a series of visible reforms lining up, and when those reforms start showing up in official statistics, market pricing, and external validation, that's when a currency narrative shifts from hope to evidence. Meanwhile, keep your eye on the mechanics that truly matter for the dinar. The official rate is still around 1,300 dinars per US dollar. The CBI's daily auction data, cash window activity, and foreign reserve disclosures give you a read on pressure points and policy traction. Cross-check quotes on multiple retail and institutional platforms to guard against bad labels. Compare IQD-USD pairs to regional proxies. Watch for consistency across the CBI, the Ministry of Finance, the IMF's Article 4 notes, and bank circulars. Consistency is the tell. It's also healthy to confront the math behind a 4.71 cent rate. At that level, the dinar would be one of the strongest currencies on earth overnight. That doesn't make it impossible, but it does make it system critical. It would require monumental coordination across fiscal policy, banking sector liquidity, payments, trade settlement, and reserve management. You'd expect bank holidays, staged conversions, and ironclad communications to prevent panic or arbitrage. You cannot stealth launch a move like that. Markets wouldn't permit it, and neither would central bank risk officers. If it's real, you'll see it everywhere before you hear it on a rumor line. For our veteran community, let this be the standing order. Discipline beats rumor every time. We all know what false positives look like in the field. Something blips on a scope, and adrenaline spikes. But the mission succeeds when you demand corroboration, weigh probabilities, and execute with patience. Apply the same standard here. Align your expectations with how the global financial system actually functions. There are no hidden shortcuts inside regulated rails. There are processes, audits, and synchronized tables that either change together or don't change at all. So here's the clear bottom line. A single $4.71 number on a television screen, without matching confirmation from the Central Bank of Iraq, major data providers, banks, and global media, does not meet the standard of reality. Television pulls from verified financial feeds, and when a true rate change occurs, it is obvious, coordinated, and fast. Back-screen rates, disconnected from public data, are not how modern settlement systems work. Focus on what you can verify: official announcements, documented reforms, visible trade flows, and synchronized market data. When those align, you won't need a rumor. Your screen, your bank, and every major outlet will tell you the same story. Until then, stay sharp, stay grounded, and stay mission-focused. This community wins by keeping its head when others chase noise. We'll keep tracking the real signals: the cabinet moves, the HCL, the Washington deliverables, the GCC ties, the revenue flows, and the policy prints. When the data forms a line instead of a dot, you'll hear it here at Dinar for Veterans, with the clarity and discipline you deserve.